I want to go over a NASDAQ strategy that we could have used yesterday. That's based on my insider's volume indicator that uses volume someday and volume someday dynamic. And I want to show you this because I think it might be a good way to approach the markets going forward when you get these big moves. The NYSE tick has not really been giving the signals, the correct signals for the short side. And it's been in a very narrow range as well. It also is based on the NYSE, and in the past, the NASDAQ, S&P, Dow would all be more correlated, but yesterday the NASDAQ kind of acted on its own, which is outside of the NYSE tick, so you have to find a way to trade price and volume on their own. And so we didn't get any short signals yesterday with all this movement. We don't trade the NASDAQ in the portfolios, we trade the E-mini S&P, and while it had a big range and a big move down, we didn't get any short signals, and so it was a challenging day yesterday. But if you want to trade just price action and volume for that market, this volume someday indicator and volume someday dynamic would have been one way to do it yesterday. And again, this is in hindsight, and the reason we're talking about hindsight is because it's possible to trade this going forward. I like the fact that this market moved yesterday. The stock indexes moved, but it was a tricky day. The tick didn't respond, didn't sell off. The other stock indexes didn't really sell off. The Dow closed up 89 points while the NASDAQ closed down 113, and gold was down. And so that was a very tricky day if you look at intermarket correlations. If you tried to hedge by going along gold on a NASDAQ sell-off, that didn't work either because gold was down. But if you just isolate each market and trade them individually, this is one potential way to do it. It's an indicator-based approach. You can jump in on an indicator in a fast market if you see it doing something that it doesn't normally do. You see the trend is given by the volume someday, and so in this time period, it's kind of red and blue up and down. But right here at 1046, it goes red and stays red the rest of the day. I see this as a technical sell-off, and one of the reasons I think this did that was because the NASDAQ made a new multi-year low. It's something that I had anticipated as far as profit taking in the market, and it happened in the NASDAQ. They took profits shortly after the NASDAQ, after the VIX made multi-year lows at 9:37. At 10:32 a.m. Eastern Time, it made a low of 9:37. In 2006, it was at 9:39. So at 10:46, then the market went red the rest of the day. And so, how do you short this if the volume someday is red? And so, if you're in a downtrend, you want to short rallies. If you can get any rallies, there's not huge rallies until at the end of the day when it rallies back and stays. So you can only sometimes get narrow rallies, and you can find these with the blues in the volume someday dynamic. And so this sums it up for the day, the volume, down volume for the day, and this keeps track of it on a dynamic basis. And so you get a little blue dot, one blue dot here, and so you could have shorted it there. You get another blue dot here. You could have shorted it there. There was not a lot of rally. So you're looking at this shorting it here. You look at shorting it there. And again, this is a discretionary approach. This is hindsight, but you have to look at of techniques to trade the market, and they can potentially work in the future as well. So here is another potential short. Another potential short, another potential short is here on this blue. This was a nice setup because it rallied. This is a bigger rally back. You see the market goes down smoothly, and then it starts to rally back there. It's still a good short. Starts to rally back there, good short, and then it goes down and it had this parabolic move down. And usually these steep parabolic move downs, of course, this is relative because if you go back here, this looks like a parabolic move down. This looks like the parabolic move down that will finish it. And so if you're trading right here, the first blue bar was near the peak. You see how the first blue bar was near the peak? So you could use a tight stop. You get it on the first blue bar, use a tight stop. Get it on the first blue bar here, use a fairly tight stop. and it worked. It worked well to trade this. Um, if you have this volume someday indicator here at the end of the day, when it finally did make its final parabolic move, the first blue bar, it wouldn't have not have been a good short. So you have to find a good stop loss to use as well on this discretionary method. So that's one thing we're looking at. I don't think you can develop a system with this right now because it's been hard to short this market. I'm going to try to develop a system with this, but there's not been enough movement in the indexes to really trade like this. And so you get a runaway market though, and you want to jump on. This is one way to do it. It's one way to give you a chance to get in a market that maybe hasn't moved in a while or is acting on its own and not correlated, and you need to take advantage of it. Use this indicator to help you short the rallies or buy the pullbacks.